All right, good evening, everyone. Welcome to the Hurley Investments commentary for the 6th of May, day after Cinco de Mayo. And dang it, I got a year older yesterday. Kind of unbelievable. But tonight, I guess I'm just going to talk to you. I'm just going to talk to you and throw some ideas and thoughts out, share with you some things on what we're doing. For those of you that may not know, www.myhurleyinvestment.com. I'm going to click on this. This is where I keep all my videos. They're all listed here. If you were to go through and scroll down, I've got years and years and years of videos in here. They're videos till, boy, some that go back to 2008. The more recent ones have, well, let's just go on a couple weeks ago. You click on the box, and here are all my notes. You have the commentary right here. You have the YouTube video. So if you wanted to, you could literally hear the whole video again. Just click play on there and off you go. But if you continue to scroll down, all the notes that I had, the things we talked about, they're all right here for you guys to be able to go through them and look at them. I sometimes tell you, hey, at the very bottom, I have articles. Here's the economic reports. There's the well, those are kind of small. There's the indexes, but here are the links. And anytime I put something out there, it's something that I think is important for you. So I literally have the links. You can click on the link and it'll open it up for you to read it all on the actual site. Or I copy and paste the article here for you just to be able to read through it. But I always have the link so you can track back to it. One that makes sure that I'm not changing any parts of it or what have you. But all of them have the links you can just click on and go right to it. I've got thousands. I guess that's not fair to say. I've got 2008. I've got 15 years worth of stuff listed in here that you guys can go through, that you can do. You can load more posts. You can actually come and search for things like Baidu and find posts and things that I've talked about in regards to Baidu. Some that date back to 2012, but you can literally search my website for things that go back to 2012, 2011, 2024. I must have talked about Baidu. It's a pretty in-depth website. It has been hacked more than once. So if for any reason you're trying to go back and say, hey, here's what we're looking for, here's what we're trying to do, I missed the notes, I want to read the notes, I want to print those pages off, My Hurley Investment, singular, there's no S at the end of that, myhurleyinvestment.com will lead you right to these videos, and you can print the notes off, you can get links to go back to them. You'll have ways to be able to see what was said in the past. Any questions in regards to myhurleyinvestment.com? And I'm going to kind of start going, okay, a bunch of people asked me, Apple, what happened and what are you doing now? So anybody know what happened to Apple? Anyone know what happened to Apple Let's see. I guess it was what, last Thursday? So I think it beat on the top line, missed on the bottom, and missed half of the, how would we say it? Half of the numbers important. Can't type. Important to Apple. Big but it also announced a $110 billion buyback. Really, its numbers were not good. We knew that. Missed on iPhones, beat on Macs, missed on iPads, iPods, beat on services. It basically gave a ho-hum. And again, it's usually its worst expected quarter anyway, but it gave a ho-hum bad quarter earnings. Well, Kevin, why did it finish up $10.52 on Friday? Well, $110 billion buyback. And I did the math, and I'm going to do it one more time because it's just fun to do. For every $10 million divided by $182, that allows it to buy 54,945 shares of stock. So the short answer is Apple has the ability right now to, well, let's do the math on 10 million, and they have 110 billion. So I need to add 6 zeros. So they have the ability to buy roughly, if I'm doing my calculations right, they have the ability to buy like, short interest is 110, but they have 15.55 billion shares. Well, I should just take it private. So 10 million buys 54. Add 4 more zeros. Wow, that's just a lot of zeros. Shocking. Pretty sure they can buy 5.494 billion shares of stock, which is just outrageous. It's just unheard of how many shares of stock they can buy. So because of that, Apple shot up on Friday. It was down today. And in all honesty, they're going to have what usually is a pretty poor Las Vegas, I don't know what they call it, the Las Vegas show. But the short answer, our expectation, we still plan on selling Apple when it reaches $196 to $199. At that point, it's fully valued. Fully valued on the high side. And we are looking for other opportunities. Plain and simple on that one. If you do have any questions on Apple, let me know. Micron upgraded after good earnings, and Morgan Stanley target price went from 115 to 150. Pretty close to where we're at, to where we said it should be getting to. Now, someone asked me, and this is just me speaking here. We subscribe to the Warren Buffett methodology of trading. We're looking for undervalued stocks. And someone asked me here recently, well, how did I say it? They basically asked me, and not meaning to be impolite, but they basically said, you're not Warren Buffett. To where my answer said, of course not. And it's funny because I'm like, well, hey, did you read the most recent article on Buffett and Paramount? And he's like, well, no. And I said, well, you should read it sometime. Bought the stock at 44, traded down at 13, only had 63 million shares. Let's just do the number, 63 million share, 0.3, can't do it, 63.3 million shares that lost roughly, we'll say $27 a share. I mean, geez, looks like $17 billion. 63.3. I guess I can't do it that way, can I? 63.3 times 27. Yeah, $1.7 billion. And I'm like, yeah, you know what? I've never lost $1 billion. And with all due respect, if I've given anyone the thought process that I am Warren Buffett, we have a serious disconnect, because believe it or not, I am not Warren Buffett. I just subscribe to the same way that he checks his stocks if they're undervalued. I run the same exact calculations. That's what I do. And the honest answer is, on up days like today, I spend a ton of time gathering information. And this individual very politely said, well, and to me, I felt like he was checking my integrity or calling my integrity to the table. Well, you said that Micron's due to receive some of this money. You need to prove it to me. And I'm like, well, I don't have to prove anything to you. But on an up day, I spend all day long consuming information. Here's an article, Samsung Electronics operating profit jumps 933% in the first quarter, beats expectations. And he's like, well, I don't need Samsung. I said Micron. And I very casually went to the article and said, hey, earlier this month, the Biden administration agreed to grant Samsung up to $6.4 billion of funding to create new manufacturing capacity to produce chips in Texas. Micron and TSMC are also poised to receive grants to boost chip making in the United States after decades of chip production moving to Asia. And I very politely said to this individual, what we do takes 40 hours a week plus some. You guys have entrusted me to work. And I'm not like the other guys that stick you in a fund where 94% of them or 6% of them never beat the S&P. I work a full 40 hours a week. I read and consume knowledge. I consume it. I take notes. I've got tons of yellow legal pads here with just notes, things to do. One for for stocks to check at the end of next year and make sure I do my research on them to see if they're better opportunities. I read everything. I spend hours upon hours upon hours reading. And it's just what I do. I feel that I should put a 40-hour work week in for you, because that's what you guys are entrusting me to do. everything I say, I'll refer back to somewhere where I found it, where I know I do a lot of percents and numbers. Numbers just stick with me in my head. I spend a lot of time looking at things to upgrade to by reading and running the calculations and having the numbers speak with me. So, in all honesty, you're welcome to call me out on things. You're welcome to ask me questions. I would ask that you please do it politely, but I will refer you back to something that I was researched it to make sure it was true. But I always go back to something that I can pinpoint what I'm saying from, one, so I'm not a fraud, and two, because I spend the same 40 hours a work week that you guys would expect me to do, doing what I do for myself and for you. So not a big deal. I'm just letting you guys know. All right, Square. Square today upgraded, but had a great earnings, and the market punished the stock. This is my new financial. If I was looking to put you into new financial, this would be where I would put you. It is volatile, and it's not my favorite right now. So if we're looking for places to put money, for those of you that sold Meta, this is an area that we're looking for Meta profits to go into. Verizon, new tech company for portfolios, and expecting a 30% growth to $52 range with a current 6.68% dividend yield. So that's what we're looking at for our tech company. Well, I thought you said it was Micron. Yes, it is Micron, but for some of us, we have a lot of gains. We have a whole lot of gains on Meta. So I'm looking for different areas to spread the money around where we have some growth. Someone asked me about Meta today. Very politely asked me about Meta. Significantly different than the conversation I had in regards to Micron. You guys know who you are. I don't take it personally, but thank you for my conversation we had on Meta. Meta, we ran the calculations and sold out at a great top. No, we didn't hit the very top, but we did very good. Hundreds of percents of return with it that don't show up even on your taxes. Now, we also kept positions in place to continue the upside potential movement. Today was one of those days that I sat there and looked at and I was like, geez, Hurley, you might need to pull the trigger on something. What do I need to pull the trigger on? Well, what I really want to do is take this profit off the table. This was our protection. This at 600 was to help us if the stock fell the wrong direction, which it did. I want to take that and convert it into a couple more of these for $40. We're going to take that profit and we're going to move it into the long side where we have all the way till January 25 for it to get higher than $520. It will move your accounts profitable in the long run. But that's what we're looking to do. If you have the 520 600s, that's what we're looking to do for those that own stock ownership. Someone asked me about the 320 370s. We already have huge profit in these. This is one of those that I'm not looking to do anything. It's trading way above 370. We're going to get our maximum profit. I'm looking to be patient and leave those alone. The 475 40s, it's right in the middle. Our protection on it is slightly profitable. Our growth process, or the money management, the big one, the 470s that makes us the money, is slightly down. It's done its job. I'm going to leave the 475 40s alone. There's nothing that I feel I really need to do with that one. And the 500 550s, we're down about $300. Yes, I could take this off, but it's not down a whole lot. We still have more than half of that protection in place. And so I'm like, I think I'm just going to leave it where it is. And the person asked me about money. He's like, okay, where's your head at? What's your thought process? And my thought process was, for this one, what are the chances I'm going to need that $5,760 of protection? Am I going to need it? Is there something that worries me in the future? I'm planning on taking it off. I'm planning on capturing this money. And I'll probably put it on when Meta, which is at 465.68, when it probably gets back up to 490. So I'll put it back on again for even more credit. But one of the decisions I was trying to make, how important is that $5,760 of protection? I go through and I ask that question for all of them. How important could that protection be if Meta blows it? It's always my first question. How much is that going to help? Second question is, again, doing the research. Technically speaking, I tried. I really, really tried. For all intents and purposes, I did the best I could to pull the trigger today. I've got one, two, 3, 4 days, and it broke the pivot point. I know it probably won't get above the 490. Kevin, why didn't you just pull the trigger today? Still bearish on the RSI. Still bearish on any moving average that you're looking at. Still bearish on the MACD. Kevin, big money seems to be moving in. Williams% R is basically bullish now. Almost, but not quite. Well, is that their money or is that other money? Where's that money coming from? Is it truly institutional? Or is it just meta money? Is it just meta money that's there that is buying back their shares with their $80 billion? To be 100% honest with you, I couldn't make up my mind. So because I couldn't make up the mind, we just basically said, wait one more day. So on those 520 600s, if you are part of that group, that means you owned that stock ownership. We're going to take off the short side and let it run. On all the others, I feel that protection is still needed, or the stock is trading high enough above it that we can wait. So that's what we're going to do. Last but not least for you, what we do here is for the opportunity. And a lot of you experience that. I think as I'm looking at who's here today, I think one of the people that has not experienced it like he should is Russ Kramer. But what we do here at Hurley Investments gives you the opportunity for some ridiculous single-year returns. It's not guaranteed, but I'm sticking in a YouTube video that shows you guys the opportunity. The opportunity to not be too worried in a 2008, to have the opportunity to have some great returns over a rolling 3 to 4.5 to 5.5 year period of time. And there are times that has an opportunity cost. And the opportunity cost is the coulda, woulda, shouldas. Yes, we could have been in something else. We would have made more money in something else. You should have been in it. We're giving us the opportunity, like we had in 2020, to get a ridiculous return on some portfolios. I'm putting that in here for you guys to see and look at. All right, I had the Samsung Electronics just to show the Micron. I found a very interesting article here about NVIDIA's CEO and co-founders, how they made it work. Basically, someone says, hey, how did you do it? How are you so rich? And the 61-year-old said, this is the most extraordinary thing. What a normal dishwasher busboy could grow up to be this. There's no magic. It's just 61 years of hard work every single day. I don't think there's anything more than that. For those of you that think this could be an easy job, if you run the job just like you would at a Goldman Sachs, stick people in funds, don't talk to them, don't care about it, don't do any webinars, just sit it and forget it. It's an easy job. If you work at it every single day, you're going to be in much better shape. All right, we still have some earnings. Briefing picture I've not put in there today because I had so much other stuff. If you're going to ask me where I think we're going to head for this week, I'm going to go higher. But I also think it's foolish. I still think people are not understanding the rate hike and that our economy just doesn't warrant it. I still think that the Fed is going to be pressured into a rate cut, excuse me. Let me try this again. I think this is foolish for the market to be going higher based on what Powell has said. There is no reason for a rate cut with our economy the way it is for this year and probably going into the beginning of next year, at least the first 6 months. I do believe Powell might be politically pushed or feels the pressure of giving us a token rate cut. But there's no reason that should happen. The fact our market's up on this rate cut scenario that he didn't say no, that it's still an option, it is just foolish. And because it's foolish, I'm a little disappointed in our market. But I do like that if we look at the Dow Jones Industrial Average, we've taken off. We are now technically bullish again, as just by a little. Slightly over the median at 50 on the RSI on the Dow Jones Industrial Average. If we look at it right here, 57.08, we're just above the 38,731. We're at 38,852. We've broken above the 50 and we have our crossovers. Our Dow Jones Industrial Average 31 stocks right now is currently bullish. The S&P, exactly the same thing. Today we pushed into the bullish camp, ever so slightly. And if I pull up the NASDAQ, exactly the same thing. We've jumped into the bullish side. A little shocking for those of you that spend time doing your charting. If you notice this little cross hidden right there, that is a doji. A doji typically means, when you see it right here, you run the other direction. Let's see if I can find another one. Move, 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 move. I don't see very many in here, but the short answer is typically it means you move the other direction. Well, we're not moving the other direction right now, so I just find that interesting. All right, an amazing week this week. Not too many important earnings. For us, we have Disney on Tuesday, and we have Disney on Tuesday. I guess that's it. Did I really not write anything else down? Disney on Tuesday. We'll have Baidu next week. As for economic reports, it's a very quiet week. Consumer credit on Tuesday, Thursday initial continuing claims, Michigan sentiment on Friday, Treasury budget. There's nothing in our way that can't let our hopium markets run. How am I looking to trade? Mostly letting stocks run. I have very little protection in place, which is very unusual for the sell in May go away. Question was asked, I think Baidu has finally bottomed. Do you agree? I don't necessarily agree. It's just running in its range. And for Baidu, it's been mostly news driven with China and the United States. So if I was to look at Baidu, it's just in that range that it seems like it's been between 116. It seems to stop at 103 to 100. And it seems to drop down and hit the 96. So they're just ranges. Dang it, we have that doji where it's run up to the 200-day. My expectation is Baidu protection is going to go on pretty quickly if it heads back down. But they're just three areas that it ranges, right around 96, right around 103, which also happens to be the 50-day, which I find very interesting. And right now we're right at that top, at that 116, where it almost went up to it and touched it today. So I would not give you the thought process that it's bottomed. It already did bottom. We did a great job of taking off protection down there at 96 and letting it run. But it's Baidu, dang it. It's Baidu. Let's just say another good job of taking off protection, hoping for a triple bottom, which means that it really has bottomed, but we won't know until earnings, and it truly won't be considered a bottom unless it breaks above its 200-day. Great question, though. Thank you for asking that. All right, here we go. April, market was down 4.16% in April. Kind of a downer month. Most of us were down slightly, like 1% or less. Marathon Oil, people have asked me, where do you think Marathon's going to go? I don't know. In fact, for me, Marathon has already made its run. I'm more apt to let Marathon be sold somewhere around $27 to $28 because it's already made its run down from 22. It's already technically very, very close to being fully valued. So for myself, I'm tempted to take Marathon off the table. Will I? I don't know. I truly don't know. Yes, I know it had a great run today, 1.5%. I would like to stay in it for oil prices going up over summer, but I don't trade oil because it just doesn't move on fundamentals. It moves on news. So I'm not a huge oil fan. Boy, I've got quite a bit on Marathon. I found this extremely interesting. Warren Buffett is worried about AI scamming. He's worried that artificial intelligence will screw people out of tens of millions of dollars. I have not been a fan of artificial intelligence. In our stock market, when you hear artificial intelligence, it's just a stock screener. It's programmed. It doesn't think for yourself. It doesn't take into consideration the taxes. A lot of people are using artificial intelligence for day trading and never calculated out the fact that a tax bill could cost you 33% of your profits on a flat year. Well, Kevin, the year is flat. That means it's like, no, that doesn't mean that it equals it out. If you get a 50% return and a 50% loss, that's a 0% return. But if you walk through the numbers, and sometimes this happens in 2, 3, 5-year cycles, if you walk through the numbers, a 50% return makes every dollar you have worth $1.50. A 50% loss makes it 75 cents. Well, what if you lose first and then get it? It's the same math. If you lose 50% the first couple of years you invest, your dollar's worth only, every dollar you have in the stock market is only worth 50 cents. If you get a 50% return, it's still only worth 75 cents. Artificial intelligence is pretty dumb when it comes to the stock market. It's not making anyone any real money right now. Here's the article on Apple announces the largest $110 billion buyback. Here's all the numbers to see what they missed and made it on. It's kind of split 50 across the board, but this is why we're looking to probably get out of Apple in the near term. Artificial intelligence engineers report a burnout. Kind of interesting. I thought this artificial intelligence was supposed to do all this programming for them, right? Supposed to think for itself. You really want to hear the truth about artificial intelligence? Read this article. It basically says the thought that computers are thinking for themselves is not true. And what else do I have for you? I think this will be it, actually. Big pile of nonsense. Love it. Block shares. I told you I was looking to go to Squares My Financial. I just put this in here so you can get to better understand Block. And I also have what we're expecting for earnings on Wednesday. With that said, what questions do you guys have? I'm kind of going a little bit over tonight. I'm in that 48-minute range right now. What questions do you guys have that I could possibly answer for you? I'll give you a couple seconds here to write them down. Expectations on Disney, I think it goes higher. In fact, I really like to see Disney up to 125. It just beat on, an activist taking it over. And so I have protection on Disney right now at 114. And I'm probably going to run it at that 114 number, even though they're at 116 today. If they get up a full $5 higher and get to that 119, I might roll it up and out in time. But right now, we're probably going to run slightly out of the money puts at 114 to see if we can't get a pretty good pop on Disney. A lot of negative news on it. The reality is its parks are full. It's doing okay in its movies, but it took a lot of the stuff out that we didn't want to see. I felt that there's no reason for girls kissing girls, boys kissing boys in G-rated movies. I think parents in that regard appreciate that the Chepix is out and that Iger's back in. Even though they spent money on some of these movies, they're just not releasing them. Abraham, what leap stocks are you considering for future trades? If I was going to do a stock replacement strategy for a leap or a leap bull call, a lot of what we're in hasn't moved the way that it should. Disney can get back to 200. Baidu can get back to 350. Let me go through the list really quickly. Ford can get back up to 27. Google might be a good one to at least get to 200 at 167 right now. JP Morgan's already moved. Coke never moves. It would be a totally speculative play, but Meta could be one, at least back up to 530. I would doubt it, but you never know. Square, 135 sitting at 72.92. Under Armour, 672 up to 2780 something. Verizon up to 52. A lot of what we're in has some really big upside potential. So if I was going to do some leap positions, a lot of it is our portfolio right now. There's some huge upside potential in what we're sitting in this year. Any further thoughts on Dominion Energy? No, Dominion missed top and bottom line. I have not thought about Dominion since we spoke about it, other than the fact that they kind of did blow their earnings. I don't know, nothing like having earnings and missing top and bottom line and blaming it on poor management and buying positions out. So, not a big fan of Dominion. Wouldn't surprise me to see it go back to 48 before it probably hits 54. What are those big dark? The short answer is it goes up higher during the day, then falls back down. So someone is selling off Dominion right now. and their earnings were pretty bad. So because of that, yeah, I haven't spent much time thinking or going through them. But we did say to get out. We did say, hey, if you got into them on that covered call, get out, get your profits, and perfect. That's good. Good question there. Thank you. Any other questions you guys have? If not, I want to thank you guys for being here tonight. We'll go through this and see if Dave can't get a little bit quicker, get this out to you guys. But all right, I don't see other questions coming in. Hey, I appreciate you guys being here. I hope this was helpful for you. Tonight, I just came in wanting to share. I didn't have a whole lot, but I knew I had some questions asked to me. So I just wanted to share with you guys. I do appreciate you being here. Russ Kramer, do you have any questions? Bert, nice to have you here with us. Bosserman, any questions from you? Good, all right. Well, good, guys. All right, pleasure having you guys here. If you do have any questions, obviously don't hesitate to email me, khurley@hurleyinvestments.com. Don't hesitate to call me. Always available to talk to you guys online. All right, guys, hey, have a wonderful evening. Pleasure having you guys here tonight. I'll end up talking to you Thursday morning. Bye-bye, y'all.